Netflix stock dropped around 14% on Monday in after-hours trading, and then on Tuesday, which is actually at the time of this recording, the stock rebounded a little bit, about 9% or so, leaving it down about 5% overall and down about 8% in the last 5 days. Now, you might remember a previous video where we talked about Netflix stock, and many subscribers felt a little bearish given increased competition in the online streaming market from some absolute giants like Amazon, Google, Apple, and of course Disney, which happens to be my second largest biggest stock. But what specifically happened on Monday that caused the stock to drop in such a major way, and was it a really big deal or just a little bump in the road? Well, let's find out. What's up everybody, my name is Ale, welcome to my world of finance. If you want to see daily videos, make sure you support the channel, hit that like button. But back to Netflix, what actually caused that drop? Well, there's really a few reasons that I think are important to look at, but either way, they're all basically related to their most recent earnings for the quarter falling short of either analyst expectations or maybe even more importantly, falling short of Netflix's own expectations. When looking at new subscribers being added to the platform, Netflix reported about 5.2 million new users being added, bringing their total up to 130 million, which is a very impressive number just kind of on its own. But the problem is that Netflix back in April estimated that they would be reporting about 6.2 million. So that's about a million more that they were expecting. And Wall Street actually was expecting a very similar number at about 6 million. And so that equates to a miss of about a million users, give or take a little bit. But either way, considering how high the stock has climbed, I don't think you can really come out and miss estimates, especially your own estimates, and by such a large margin. And no matter how you divide up that number, given domestic users or international users, and by the way, remember that in that previous video we talked about Netflix's future growth potential being mostly internationally, lots of room there to grow and to bring in more subscribers. And so but either way, they basically missed both estimates, both domestically and internationally. When looking at domestic numbers, they were expecting about 1.2 million new users being added for the quarter. They only got about half of that. That's right, about half of that number at around 670,000 new users. That's a pretty big deal. And then looking at international growth, they were expecting about 5 million new users. They only got about 4.5. So that's about a miss of about 500,000 users. Now we're looking at their guidance. They're being much more conservative for the next quarter. They're projecting only about 5 million new users in total. So both domestic and internationally, they're expecting only about 5 million, a much more conservative number overall. Now, when it comes to their EPS, they were expected to announce about 79 cents to 80 cents. Thankfully, they were actually able to beat that. They reported about 85 cents, which is much higher than the same quarter a year ago. At that time, they only reported about 15 cents of EPS, so this is a much higher number year over year, much higher year over year growth there. However, I should note that they did actually miss revenue. They reported about 3.91 billion. They were expected to report a little bit more than that at about 3.94 billion. And so how has the company responded to this? Well, Netflix's own CEO basically said that they had a strong but not stellar quarter, citing that they over forecasted when looking at subscriber growth for that quarter. Netflix also reminded investors that they tend to give the same guidance as their internal guidance. In other words, they're basically claiming that they don't do what many other companies often do, which is to give lower guidance just so that they can beat those estimates. They're basically saying, hey, we give the same guidance as our internal guidance, the guidance that we believe in, that we're actually expecting, and so sometimes that guidance might actually be a bit high. But whether that's true or not, or whether you believe that or not, I still feel that at these really high prices with a PE ratio up above 250, I just think that strong is not going to cut it anymore. I think they're always going to basically need stellar. And so Netflix actually said that, hey, we're going to have some up quarters and we're going to have some down quarters. It's just kind of the way that they operate. Again, kind of citing that they give their same guidance as internal guidance. But I just think that that's not going to cut it anymore. You can't have some up quarters and some down quarters, not at these prices. You're going to have up quarters pretty consistently here. Now, the question is whether this is just a bump in the road or something bigger. And I'm actually seeing that a lot of analysts online, from the research I've been doing, a lot of analysts actually think that this is just a small bump in the road. I personally don't think that. I do think that it does mean something bigger. I mean, think about it. Netflix has a higher market cap than Disney by around $1 billion. I mean, let that sink in. That's pretty insane. If there was no competition in that market, not to mention the fact that Disney themselves are actually entering that market, then maybe I could understand. But at this point, I actually think that Disney is a much stronger, more diversified company that actually has stronger IPs as well. Although you could technically make the argument that Netflix did just beat out HBO in terms of Emmy nominations. Netflix got over 100, so that's definitely a good positive thing to look at. But either way, I still think that Netflix is at a pretty ridiculous valuation. And look, no worries, Netflix is very overvalued at this point, but that doesn't mean that they can't have a bright future or that they can't fight off some of this growing competition. But I think that when you look at Netflix stock, you really have to do your homework and know what you're jumping into. If they don't amaze, then the stock is going to get hurt. That's just the name of the game and how it works with hyped up stocks. We all know that you're supposed to buy low and sell high, and so if you want to do the opposite of that, then that's okay. You can still have a lot of success there. Amazon is a great example of that, but you have to be aware of the risks. And so if the stock gets corrected, then you have to accept it. You can't let it get you down. You got to learn from your mistakes, be aware of the risks involved with hyped up stocks, and be able to move forward. But anyway, how do you guys feel about all this? I'd love to hear your comments down below. Are there any Netflix shareholders out there? How do you guys feel about Netflix stock just in general? You know my story. Disney is actually my second largest stock. So obviously I'm a little biased and maybe a little bearish on Netflix as well, because I am expecting great things from Disney. But who cares what I think? I'd love to hear what you guys think. Leave your comments down below. Thank you so much for watching. I'll see you in the next video. Take care. Have a nice day. Bye.